Anand, first a word from you on the markets. What do you see as the trend from here on? I mean, we've not had a good time in the last couple of weeks. Do you see this getting worse?
Quite possible. I think the last time I was here, which luckily was more than a couple of weeks back, I think was the time when euphoria was at its highest, that Greece problem would quote unquote get sorted out. I think realization has now hit that there is no sorting out of the problem. You cannot sort out debt by taking more debt and then trying to leverage that debt to raise more debt and hope to pay that off to the creditors. So eventually there is no sorting out of that, and therefore as that realization comes, the market will continue to fall. That said, I see very little participation in the market at almost any level, whether it's institutional or retail, and therefore that may provide some flow somewhere, which I'm sure Sudarshan will be in a better position to mark out as to exactly where. On a valuation basis, I still maintain 44,000-45,000 would be a level where you might be interested in looking to buy the market, because that's a historical kind of 12 times forward PE. I don't think that changes. That has changed too much in these results. But overall, I don't see the market definitely there's very heavy headwinds for it to move up from here in any significant manner or form.
Anand, what is your reaction to the way capital goods names have fallen, the likes of BHEL and L&T, not just today, but it's been relentless for a month now?
So clearly the market is now really worried about the interest rates and the fact that availability of debt itself may be a problem. So anything which has got debt or has an order book which is related to things which have debt are not doing well, and with that kind of holds for all construction, almost all capital goods equipment and banks as well. And I think that's the thing that we're really looking at. It's not particularly any one sector, just that there is no availability of debt. The ability to raise money is going to be stretched, and the interest cost of capital has gone up very significantly. So if you don't have cash, the market doesn't want you.
Anand, we are seeing many of these consumer names like VIP, Titan, etc. give up a lot of their gains. If you have made profits in these, would you advise profit booking at this stage in the consumer names like Jubilant Foodworks as well as another one?
Well, most of them are now not priced to give you any significant upside. What is happening clearly is that those consumer companies which have cash, and some of these that you mentioned don't necessarily have large amounts of cash, are well protected in terms of downside, but are also priced accordingly. So, for those companies, you may find that that's a good place to hide on a portfolio basis. For the ones that you mentioned, perhaps to some extent, they are actually leveraged more on the consumer demand story. And to some extent, I guess the market's now factoring in the story that the consumer demand itself may slowly weaken as interest rates continue to rise. So while, consumer, things like HLR and ITC, etc. are probably more immune to a demand slowdown because of the nature of the commodity of the products they produce. Titan is finally a discretionary spend and can to some extent be cut off.
You spoke about the multiple headwinds facing the market, Anand, which are restrictive to upside. But for how long you think? Do you think it's a 3-month problem, or the way things are getting positioned now locally and globally, it will take a long time to fix the market's problem?
I think the problem is quite fundamental, at least on the international level. If you look at what's happening globally, I think we are set for a prolonged period of slow growth, perhaps no growth for many quarters to come. Now, the issue is that will they translate into what looks like a currency war? And if you go back in history, we had this, mutual destruction kind of policy of trying to bring down the currency. I think you find that euro has no option but to also try and devalue itself, and then if you find that so is China, so is US, and so is Europe, and perhaps to some extent both the Swiss franc has also signaled the same thing, and so has the yen, you have a situation where inflation in emerging markets will continue to be imported because of global action. So very low growth in international markets. On the domestic front, I think we've done enough to shoot ourselves in the foot, and the fact that the policy situation in the country seems to be in an absolute limbo, and that we are now getting getting into election time for some of the crucial states will also mean that the politics will now overrun any of the economic decisions that may occur. So on both counts, I don't think that there is any great possibility that there will be a reversal any time in the near term, and by that I mean even perhaps 3 to 6 months. We could also always have an out of the box kind of event which one cannot predict right now. But I think the universe of that kind of out of the box thing seems to have become very, very small right now.
Anand, you were talking about policy paralysis. There's been some noises today from New Delhi getting into the winter session about GST, about FDI in retail, etc., in pensions. Do you think this session you might get some positive fillip for the market, or do you think it's unlikely given the context and the political, the elections around us as you spoke about?
So let's look at GST. I think theoretically it should be a possibility, because most parties, at least the larger ones, have expressed that they would want to support it, and really there is not that much of an economic argument against it. So it should be something that they should be able to push through. The retail part, I am at variance with what the rest of my colleagues in the market seem to think. I think it's a complete disaster to have an FDI in retail, and I see no economic rationale for it at all. So if they do, as far as I'm concerned, that would be a really bad policy move. But so I'm hoping that they won't be able to do it. Any other kind of policy change, frankly, any kind of positive movement at all would be taken as a positive sign by the market, irrespective of our personal prejudices or otherwise. But as you mentioned, because there are, look at what's happened to the oil right now. Between the last time and now, the rupee has actually become weaker and the oil prices have gone up, and yet we raised the prices just a few days back and drop it today, almost exactly opposite of what should have been done. So the fact that politics is now absolutely dominating any kind of economic decision making is very clear for anyone to see.
Anand, the market seems extremely cautious about anything which has got a balance sheet problem. I mean, the Kingfisher, of course, has been the big talking point this week, but any infrastructure company or aviation company which has a balance sheet issue has been torn apart. Do you think these companies will be able to fix their balance sheet in this kind of an environment?
Well, in this environment, almost definitely no. Whether they can fix their balance sheet over the longer term is what is the question. Because if you look at it at today's valuation, most infrastructure companies have perhaps no value on the equity. Because if you've got, especially if you're an asset play, because if you were to use current values of discounting, and the fact that whatever asset you've got will actually mean negative equity. So to a large extent, the fact that they trade at non-zero values essentially means that the market is paying an option value for the business as it exists. So purely on today's valuation, almost clearly no. The question is how soon can the market improve? And as I said, the real fear is that if the market were to have a liquidity shock in the form that we had in 2007 because of Europe, this time rather than the US, then we will have a serious problem, because some of these companies, especially those which are foreign borrowings, will be very, very prone to having a problem in terms of rolling over the debt. So anything with foreign borrowings, is a big issue. Those with domestic borrowings also is a big issue, but at least here the problems are equally between them and the bank, because I've heard more than one promoter tell me that who's about to repay the loans, at the end of the day the banks have to come back and restructure. So we will have a problem of a different kind in this country as well.